Thursday, the 5th of November. Welcome, my panelists, to today's edition of Frontier Opening Bell. Great to have all of you. Let me start with Chima Ukadike from Vertiva Capital Management, Alikan Sacho from Rich Frontiers Management in Nairobi, Akuntunde Suleiman from Greenwich Merchant Bank, sitting here in Lagos. Thank you to three of you. It's great to have you. I am boasting them. I hope we had a wonderful night. Let's continue some of our Pan-African stories coverage as we keep one permanent eye on our TV sets for the US election, presidential election, vote counting and all of that. Very interesting drama from the world's #1 economy. Nigerian stock market, a gentle 0.03% on Wednesday. The Ivorian stock market softened by 0.04%. News this morning was that the Ghanaian president, Nana Akufo-Addo, he has made some phone calls to some West African leaders to get into Ivory Coast, into Abidjan, to have a word with Alassane Ouattara, who's secured a third term in office. The political simmering in Ivory Coast does not look well for this big Francophone speaking economy in West Africa. Egypt 0.43%, good news from there, from the stock market. Kenya stock market down about 0.3%. South Africa was up 0.88%, just as the currency. The rand also yesterday followed the rest of the emerging market currencies on the back of the US elections. The dollar come back, then a bit of a softening again. Markets still trying to decide what to do as far as the vote counting in the US is concerned. Let's touch on East Africa very quickly and look into the big stories there, where KenGen brought in a retired Army general as the chairman. I'm trying to wrap my head around that. Ali will try to shed some light in that if you need a general to marshal the way forward for this very powerful electricity company in Kenya. And the remittance is still flowing into Kenya. I'm sure Ali and the rest of the team, Agnes and others, are still sending money home fast and furious. 316 billion Kenya shillings. Even at today's exchange rate, I'm sure there's still a pile of money coming back there. The CMA in Kenya has okayed Absa Asset Management to operate unit trust funds. About 5 different products are being opened up by Absa Asset Management to deepen investments at the retail end for the Kenyan investors. Uganda's PMI 55.8, the season for PMI reporting. And then it looks like South Africa's factory activity is still one of the best on the continent, followed by Egypt and others. Nigeria is still below 50 at about 49 for October, 49.4. South Sudan, AfDB okayed $440,000 emergency relief funding for the victims of the flood. Ali, let's get this retired general conversation up for KenGen.
Yes, so KenGen, of course, was a very popular IPO under the Kibaki administration, but the majority stake is still held by the government of Kenya. They're the appointing authority in this case, and the current chairman's term has now expired. And this is the appointment of the retired General Samson Motete as the board chair. The challenge for KenGen, which is a very interesting green-focused power generating company. Its big production is in geothermal, and it's executed extremely well. The problem for KenGen is it has one major customer, that customer being KenyaPower. And KenyaPower's balance sheet has been very weak. It owes KenGen a significant amount of money, about $200 million, I think, at the last count. And I think the appointment of this Army General is probably to go over to KenyaPower, read the Riot Act, and extract those funds that are currently owed to KenGen. So this, I think this is, there are some issues around the militarization of a lot of appointments that have been made under President Kenyatta of late. The Nairobi, city of Nairobi, of course, saw similar army general appointed to its head. And then I saw a story this morning, KenyaPower has been permission to raise power prices 20% to the consumer. And I think, that's going to come under serious challenge because a lot of people are already feeling the pinch. The diaspora remittances headline you spoke about, 316 billion shillings in 2020. It really is remarkable. All predictions of a slide in remittances have been confounded. I think remittances in 2020 are running about 600 basis points higher than the previous year. It's a remarkable outcome where most people had predicted a fall of between 10 and 25%. But, it speaks to me philosophically about the monetization of the most valuable capital in Africa, that is our human capital. We always talk about natural resources, but the best capital I can think of is our people and those who walk on the ground. This has been a remarkable outcome. It has saved the shilling, which would have been considerably lower had we not seen this inward flow. And it remains seriously counter-cyclical, as it has been previously. Interestingly enough, whenever there's been a downturn in the West, for some reason our people actually support their people back home more aggressively. So fantastic outcome. Absa Asset Management, CMA Nord to operate unit trusts. Absa has been making some interesting moves in the capital markets. It also has an interesting instrument on the stock exchange, which is a gold-backed security. Stanbic Bank Uganda PMI rising to 55.8% in October. This has been a general trend. Kenya also had a very strong PMI number released this week. And then just to quickly touch on some political developments, of course, we've got the situation in Ethiopia, in Tigray province, where all the reports are signaling that Prime Minister Abiy sent the army in. The internet has been switched off, so we don't exactly know what's going on. But, that's quite a volatile situation to the north of us here in Nairobi.
Interesting development from Ethiopia. It doesn't look like it's capturing the world attention despite the US elections, and quite a whole lot of news organizations are looking into that. If a civil war is just imminent in Ethiopia, if there's going to be a fractionalization of the country by some of these regions, and if Prime Minister Abiy will be able to hold everything, to hold the center together, and prevent a major breakup within the Horn of Africa with what happened between Djibouti and Somalia years and years ago. I'm sure it's not going to be a very good to return to those days of another breakup in that very important economic powerhouse, Horn of the continent. Let's touch on West and Nigerian markets. Akintunde Suleiman, I'm going to ask you when you will begin to look at political dissent and issues of this nature with the uncertainty around the elections in Ivory Coast or Cote d'Ivoire. And then we just piggyback a bit to our recent youth protest over police brutality, and some folks use the opportunity to talk about good governance. So when you look at what's happening in Tanzania, in Cote d'Ivoire, in Uganda, and other places, do you think it is time for political leaders in Africa to begin to have, to take democracy and democratic rule, good governance very seriously?
Yes, Watson, I agree. I mean, the democratic principles is key to development of a nation. I think what we are seeing across Africa right now is some sort of continental uprising. These are people that have been oppressed for a while, and they feel they are entitled to more, or they deserve more than they are currently getting. I think this is a call to leaders to sit up. It's a call to leaders that business will not remain the same. they need to start taking key ideas and making key decisions in which will elevate poverty across the continent, not just in the country, across the continent, and will create better life for individuals, will develop job opportunities, and we evolve the economy, because livelihood, it's the essence of life. And like I always insinuate, a poor man really has nothing to lose. Poverty, anyone raped with poverty has nothing to lose, because he will keep fighting and keep fighting, because there's nothing back home for him. All he has is his life, and the life is not as comfortable as he wants it to be. So he has everything to fight for. The leaders who have accumulated a lot of wealth and have a lot of that, are the ones who will be at the end of the bullet, because you see these guys who keep coming out and keep coming out. At some point, the streets will be filled up with these guys, with people that deserve more and want more. When you're driving out, you see them and they'll stop you at the road. There's nothing you're going to do, and that is the same thing we're experiencing in Lagos now. I'm sure you've read of a lot of reports where we have people on the streets in traffic breaking glasses and all that, because they're tired of the way they're living, and they want more and they deserve more. So I think it's a call to leaders generally to create a reformist government in which we look keenly into what the citizens need and deserve to push the states ahead, because it's an uprising that's coming around, and if we don't handle it carefully, we may go back to what Thomas Hobbes called the state of nature.
I think this is very concerning and disconcerting when you look at what you just talked about on the streets of Lagos, in very highbrow places like Ikoyi, Victoria Island, at traffic junctions and traffic lights, and you find these young girls just driving around in the evening. You're not too sure what's going to happen as you're driving home, muggings while you're driving in vehicular traffic, using instruments to break your window, stealing, robbing, and all kind of things. A whole lot of idle hands becoming a devil's workshop. It looks like we have more folks at the devil's workshop than you have at the factories to produce goods and services into real productivity. And that's not really good. So that takes me to Chima Okadike. When we look at Nigeria, yesterday the CIS, the data is continuing right now as we speak for the Chartered Institute of Stockbrokers, looking at business laws in Nigeria. The Companies and Allied Matters Act review signed on by Mr. President. PEBEC Chief Executive, the head of the Secretariat, Dr. Jumoke Oduwole, who is also an SSA to Mr. President, says Nigeria would no longer wait for so long to review necessary business laws, as we saw the KAMA review taking about 30 years to come to a new level. Corporate governance, transparency, technology, and all of that were part of the discussions over the last 2 days. The food and beverages, consumer goods are coming through with positive numbers. Profit after tax, 146 billion from Northern Nigerian Flour Mills, in the footsteps of one of its main rivals, Flour Mills of Nigeria, PLC. Nigeria is dealing with a number of issues right now, but the Bank of Africa in Senegal, net income down 10%, 5.5 billion CFA in third quarter. Stanbic Bank, Ghana PMI, 53.1. better than Nigeria's numbers at 49.4 for the month of October. And finally, AfDB has postponed the AIF, Africa Investment Forum, that usually takes place in November till next year on the back of COVID-19. Ali will speak to the AfDB, but let me get Chima to comment on the Northern Nigerian Flour Mills. Looks like the good times are here to stay. Am I too optimistic?
Well, you may be. Nobody knows for sure. Many of these companies are really riding on market share gains from the border closure. We've seen this affect revenue levels and revenue growth for flour mills and for several consumer goods companies, for the sugar producers, for the agro-allied producers, and for the flour makers. So I think that is what we're seeing here. So based on that fundamental, I think that the length of time that where these positive gains will last will largely depend on how long the borders remain closed. And giving news that we may get to see open borders in 2021, then we don't know if these companies will be able to sustain this very large revenue growth. But speaking specifically to Northern Nigeria Flour Mills performance, we can see that they've done very well for themselves. although they have a smaller market share, looking at their revenue figures compared to other companies, you can see that they have a smaller market share. But looking at profitability and performance and efficiency, looking at their margins, we can see very large improvements, very significant improvements across board. When we look at gross margin, we saw that gross margin improved about 4%. 4 percentage points from 6% last year to 10% this year. Also, operating margins improved by about 3 percentage points from 3% to 6% this year. And operating margin improvement is very significant, given that in the year since we've seen a lot of hikes in terms of electricity and fuel and logistics, and the impact of the COVID-19 pandemic on businesses. I think it is a very significant improvement for these companies. Actually, for the NNFM, I'm looking at its profits figure. Last year it made a loss, but this year it has made a profit of about 146 million, like you rightly said, which is a very significant improvement. So going forward, like I said, I think there's the continuous revenue growth will hinge largely on if they're able to keep their market share gains from the border closure, whether it gets open. It's possible that when the borders get open, they'll be able to consolidate on gains made already and still be able to protect their market share. But it also depends on how their business environment is. One news you mentioned was that PEBEC has said that it will no longer take a lot of time to review business laws. I know PEBEC is the body in charge of improving the ease of doing business in Nigeria. And so one thing that will be very relevant for many of these companies is the ease of doing business. If you can make revenue, but the hardships or challenges that are involved in doing business are continuing to eat into your margins, like we're seeing for a lot of these companies, then it's not really a good standpoint for companies, for Nigerians or for local companies. And then it also affects willingness of investors to invest in markets, FDIs and FPIs alike. So I think we have a long way to go, but we should take our victories as small wins when we see them.
Okay, great. I want you to, we'll go to Southern Africa, everyone, but I want Chinma to think this through, because we can't keep the land borders closed forever. One way or the other, the borders will have to be reopened whether Nigeria likes it or not. So when that happens, what would happen to these northern Nigerian farmers in the agro-ally, the palm oil, whatever, who will be ramping up positively on the back of the land border closure? What do you think they should be putting in place right now to ensure that they don't lose the grounds they've gained right now on the back of this land border closure? For me, I think that's a fast-forward conversation that planning that I think they should be having right now, not just basking in the euphoria that, yes, the land borders are closed, let's just get a bigger market share. It's not just about selling. What else would they need to do to retain this local market confidence and space, so that when the borders are reopened, those who are bringing these imported items will find out that, look, the game has changed within the period. That's something I want you to give us about a minute of your thought after this. But let's talk about the Southern Africa market, where the South Africa factory activity expanded in October for the first time in 18 months. That was good news that came in yesterday evening. At the same time, the South Africa's JSE completed precedence and acquisition of that Link SA. They said they would change the name later and all of that, but it's still there. JSE has been making acquisitions and changes to retain its #1 position as Africa's largest securities exchange, whether it's for equities or bonds or derivatives, ETFs, whatever. Our energy infrastructure company, and this is a very interesting story, Mahube, started trading on the JSE, South African Stock Exchange. This is a company with energy infrastructures in South Africa and has now moved on. It was seen yesterday as a big change for South Africa, where Eskom and his trouble is still on the books. Eskom is still predicting a big loss north of 23 billion or 26 billion rand for next year, by the way. Impact Oil and Shell have signed exploration rights offshore in Africa. S&P upgrades Sibanye-Stillwater credit rating outlook is now stable. Total is selling stakes in Angola oil field. It looks like Ali, whichever way we look at it, oil is not going anywhere, at least not yet.
So, with respect to the oil price, we've had we had that very steep sell-off, and then we've had a rebound, a pretty sharp rebound. And I think last time I'm looking, Brent crude is at $41. Look, I think that's more about the renewed appetite for risk assets driven by the Biden victory, which we can call it now, frankly. You've seen that express itself in the sharp rally in the renminbi, the sharp rally in the rand. The rand came below 16 for the first time that I can recall in quite a while. The JSE got a massive boost. Stock markets, emerging market stock markets got boosted. And I think, you know, crude oil has come back off the back of that. My concern about oil remains discipline on the supply side. In a very tough environment, I have found that oil producers completely lack discipline. On top of that, you've got Libya flying to 1.1 million barrels per day anytime now. And you've got a bunch of folks who really need the money. Otherwise, there's going to be major regime change in any oil producer you care to mention. So I'm not convinced about the supply side. On the demand side, look, I mean, unless you believe in Trumpian reality TV, there is no silver bullet right now. The UK is locked down. Europe has got highest cases. America topped 100,000. Where are they all going? I mean, they're not exactly flying around the world, are they, right now? So the demand side, I think, remains very depressed. I think the winter will be quite bleak. Therefore, on the oil front, I think, you know, one's got to be cautious. But that's positive news with respect to offshore South Africa. I don't know what the price structure is. It might be very, very compelling. But just to get back to your main story, South Africa, we saw a big bounce in the rand. We saw the Johannesburg Stock Exchange rebound. Some good factory data activity coming out of South Africa. So overall, a much more positive sense. And I think this is the positive spillover effect of Biden. And then just to touch on a couple of other headlines you mentioned, the Johannesburg Stock Exchange really is so far ahead of the curve when it comes to other African stock markets, in my opinion. They're now thinking of setting up a blockchain where small and medium-sized enterprises can raise capital on the JSE. You know, they're going to see a ton of business, hopefully, out of other parts of Africa as well. And Total selling its stakes in the Angola oil field, that's an interesting story. You know, Angola, of course, has been negotiating with China. It has huge amounts of debt. We're over 100% debt to GDP there. We've had problems on the streets there as well. Your guest was speaking about, and I thought that was a very powerful analysis of the problem on the continent. But I think that's a negative story for Angola because it's telling you that some investors are bailing out. And Total is a very big player. Of course, they got that huge exposure in Mozambique, up in that very difficult province of Cabo Delgado, and maybe they're recalibrating their sub-Saharan African oil and gas portfolio.
Yeah, I guess it's much. Suleiman, Nigeria is still within the oil and gas space. So when you look at these developments across Africa, whether it is in LNG gas in Mozambique or Angola next door when it comes to its own oil industry, new refineries being built by between Sonangol and other private partners, almost $1 billion facility, and our PIB is still hanging there at the Senate with all the current the issues we have on our hands. How quickly do you think we should be able to turn things around? Oil prices is not friendly at all for 2020 budget and for 2021 budget as well right now. Even January delivery for Brent crude is just barely touching $40 a barrel.
Now that the National Assembly has pushed PIB to next year, there's no hope for this year, and we know how the debate goes in the House. It's going to be lengthy. I personally do not think we're going to be seeing that bill passed in 2021, to be very candid, because we've seen it keep recurring in the House. It keeps coming, and it never gets out passed. So it's going to be tedious. And looking at the news today, where we had an explosion in the OML. facility. That puts a bleak perspective into our production again, because currently Nigeria is producing about 1.5 million barrels per day, and that is an average rate, and experiencing this explosion again puts us below that. And if you look at our budget, we have about 1.86 million barrels. For this year is about 1.8, for next year is about 1.86. And looking at the quota cut again coming from OPEC plus and the depressed prices in the market, coupled with the supply that we are seeing from Libya, or anticipatory supply that we would be seeing from Libya, that puts a very big pessimistic outlook for oil. And for Nigeria, it's not good because of our peculiar state, and most African countries now depending on oil. It's not going to be so optimistic like we hope. Turning around oil in Nigeria, I do not see that happening in 2021. The PIB will remain there. We'll keep debating on its value. The House will try to tweak it and change it to suit some of their positions, and it's good to the presidency, and the presidency will reform again. So I think it's a long walk for Nigeria. It's a long walk to freedom. We'll see in 2021 we'll still be highly dependent on crude. Crude prices won't be as anticipated. $40 per barrel in our budget, I think, is a bit optimistic with the current situation in the across the world. Looking at the rise of the second wave, I don't think we are going to achieve the $40 per barrel benchmark. Production levels as well. Output, I think, up to be highly subdued as well, because we're currently hearing OPEC Plus is going to have further discussions on keeping quotas at this level, or rather reducing it as well. So we do not think the oil will be a very big player in our revenues next year. Looking at the non-oil sector as well for Nigeria, looking at downward business trends and all that, we think that will be pressured as well. That puts a point to our GDP. What would our GDP be for full year? It's not going to be as optimistic as we have anticipated. World Bank is saying in 2021 we're going to be marginally positive by 0.3. We might not see that if oil continues trending at this level, and if those supplies keep coming, especially from Libya has reignited its production, that will create more supply glut in the market, which will depress prices further. And if China is not picking up as anticipated this year, yes, fine. If next year, if the demand is not increasing, currently they've paused on their demand in the market, and if that demand doesn't pick up by next year, we're going to see our prices plunge further. And any price below 40 for Nigeria is not $40 per barrel for Nigeria is not good.
It's not good. It's not good news. Let's wrap up the show. But Chiba Okadike, we're back to that. What strategies do you think Nigeria's consumer goods leaders, either listed on the exchange or not listed on the exchange, should be adopting right now to leverage the land border closure moving forward?
Thank you, Pastor. Like you rightly said, at some point we will have to reopen the borders. We know we have the AfCFTA on the horizon, and that actually involves trade with our neighboring countries. So at some point, whether in 2021 or down the line, would have to open it. And these companies have actually been riding on gains of the border closure. But when that happens, I think that if they're not careful, they'll see all the gains go back downstream. So one thing for me, I think that all companies are as good as their product value, their route to market, and effective cost optimization. So I think once they're able to innovate, bringing out products that are valuable to consumers, that consumers would rather pick first, solve the problem, and currently are always in the face of consumers and inspire brand loyalty. I think that is one very important point for these companies to look at. I also think that their distribution strategies need to be on point. They need to focus more on getting to where the consumers would like to be, or where they would always continuously be in the face of consumers, and so they'll be the first pick, so that they can be the first pick of of the consumers. And lastly, I'm looking at cost optimization. One point where the smuggled products, most smuggled products have an advantage over locally made products is in the price. It is way cheaper to consume smuggled products than to consume local products. And most of the time, these local companies do not have, it's kind of out of their hands when you look at all the costs that have to go in. Look at FX costs, you look at energy costs, electricity costs, fuel costs. All these have to go in. These companies have to take this in to consideration to add their margins and then make a profit. However, I think that they can try to be more cost effective, looking at more investment in their backward integration programs, investing more in local agri farmers so that they can at least limit the pressure from FX volatilities. That way, they'll be able to boycott some of the increased costs that they're seeing from importation of raw material inputs, and then that would definitely affect their pricing, and then they can have competitive pricing with the smuggled imported products.
Brilliant, very brilliant. I'm sure they should be paying you for that, for what you just said. Just put it somewhere and just market it. Because we just can't lose this momentum once the land borders are reopened, and we'll have to reopen it. So let's open up finally to the North African space and just get a bit of a sense of the Morocco's getting World Bank's approval, $150 million for urban transportation program. That's huge. But the biggest news for Africa as a whole came yesterday from Afreximbank with the ITEFC and the Badia. These are banks, financial institutions in the Middle East, putting hands together with Afrexim for 1.5 billion COPREFA facility for Africa. Central banks, commercial banks can draw down on that. Ali, it looks like the Middle East guys are here for some chunk of Africa's business, and they just want to sit down, watch the Western economies and China get it all done. They are here as well.
Oh, absolutely, it's complicated. That and I think you've got to give credit to Afreximbank and the president Aromo for being able to collaborate with these folks and bring them to the party. So I think that's a very positive step. It's Aromo tends to like these big tickets. This is a big ticket, 1.5 billion. It's not small potatoes, and it will be a meaningful intervention, I am sure. So very impressive development, I think. Morocco, $150 million. If you've looked at Morocco's transport infrastructure like I have, if you're south of the Sahara, you will be, I promise you, very, very jealous, because they've really got some 21st century transport infrastructure over there. And I think the World Bank is just saying to themselves, look, these guys know how to execute. Let's chuck them some more money. And I think, congrats to them on that front as well.
Thank you. Thank you, Ali, for summing up for us this morning on the show. Thank you so much, Ali Kansacho in Nairobi, Akitune Sulaiman from Greenwich Merchant Bank in Lagos, Nigeria, as well as Chima Ukadike from Betiva Capital. Thank you so much. We appreciate your time. Let's leave it there for today. We'll continue tomorrow, Friday, the 6th of November. Bye for now, everyone, and have a great day.